Welcome to our webinar on the FBAR and Form 8938. This webinar is being hosted by Esquire Group, and I am Jimmy Sexton. I am your presenter today. We'll be going through concepts and rules regarding FBAR filing requirements, Form 8938 filing requirements, and we'll also touch on Schedule B filing requirements. In your GoToWebinar tool, you'll see that there is an ability to ask questions. You can type them in and they'll appear on my dashboard. I will hold any answering of questions until the end of the webinar. So please, if you have any questions along the way, go ahead and type them in and then I'll try to address them at the end of the webinar. So to start off, we'll start off with our disclaimer. This presentation is for informational purposes only. This presentation was prepared for educational purposes only. This presentation is not legal or tax advice, nor is it to be construed as such. Each individual circumstances are different. You should seek legal and or tax advice to address any specific questions you may have. And that'll also lead me into a further comment regarding the asking of questions. Please keep your questions general and not specific to your particular situation. Again, my name is Jimmy Sexton. I'm the presenter. A little bit of background on myself. I have a Bachelor's of Science in Business Administration with an emphasis in finance, a Juris Doctor, an LL.M in International Taxation. I'm the president of Esquire Group, which is an international tax advisory firm. We have offices in Las Vegas, Phoenix, Vienna, Austria, Frankfurt, Germany, and the United Arab Emirates. We specialize in international taxation, including issues facing U.S. citizens and resident aliens living abroad, expatriation, investing, or doing business abroad, and foreign investment in the U.S., along with tax compliance. I'm also fluent in English and German. So we'll go ahead and jump right into this. So the first thing that we're going to talk is the FBAR. The FBAR is the report of foreign bank and financial accounts. And before we get into what triggers the FBAR filing requirement, I want to mention that the FBAR is separate from your tax return. The FBAR is not filed with your tax return. It is filed with directly with the Treasury. It has to be electronically filed. There is also no tax based on the FBAR. The FBAR is simply an informational reporting form. So you're essentially just conveying information to the Treasury. And again, it doesn't generate any tax or anything like that. So when do you have to file an FBAR? So you have to file an FBAR to report signature authority over or a financial interest in foreign financial accounts if the aggregate value is $10,000 or more. So I'm going to break this sentence down a little bit. We're going to talk about what signature authority is. We'll talk about what a financial interest is. We'll talk about what a foreign financial account is. And then we'll talk about this $10,000 threshold. So signature authority is pretty simple. If you sign on a foreign bank account, you have to put it on an FBAR. It doesn't matter if the account does not contain your money. So if you sign on your friend's foreign bank account and there's more than $10,000 in it, you have to list that account on your FBAR, regardless of anything else. So that's pretty straightforward. The second one is a financial interest. So what is a financial interest? A financial interest is a little different because you can have a financial interest in a foreign financial account without having signature authority. An example would be, let's say that you have a German friend that lives in Germany and you give him 20,000 euros to put in his German bank account on which you do not sign. Well, you have a financial interest in his bank account because it contains your money. And so you would essentially have to file an FBAR reporting that you have a financial interest of the US dollar equivalent of $20,000 in your friend's German bank account. So now that we've talked about what signature authority is and what a financial interest is, let's talk about what a foreign financial account is, because there's a very common misconception that a foreign financial account is simply a bank account or a brokerage account. And bank accounts and brokerage accounts are definitely foreign financial accounts, but the term is very broad and encompasses a lot of different types of accounts. So, like I said, it encompasses bank accounts, it encompasses brokerage accounts, it also encompasses foreign mutual funds, it can encompass security deposits on rented real estate, it can include foreign annuities, life insurance policies with a cash value, so foreign pensions. So it is really quite a broad term. And that brings us to what the filing threshold is. So the filing threshold is $10,000 or more. There's a very common misconception that this $10,000 threshold is per account. So, for example, that if you had two accounts with $9,000 in them, you don't have to file an FBAR because both accounts are under $10,000. That is not the case. It is an aggregate value. So if you have signature authority over or a financial interest in foreign financial accounts, and the combined aggregate value is more than $10,000, that's what's going to trigger the FBAR filing requirement. So going back to the example of two accounts with $9,000 in them, even though both accounts are under the $10,000 threshold, if you add them together, we're at $18,000, which is more than $10,000, and you would be required to file an FBAR to report both of these bank accounts. So I think that pretty much describes what the filing requirements are for an FBAR. So now let's talk about some of the nuance to filing FBAR. So if you have a joint account with a foreign person, for example, and this happens quite often where you maybe have a husband that is not a U.S. person, and you have a spouse you have a wife that is a U.S. citizen, and they have a joint bank account together. The wife is going to have to file an FBAR and report the foreign financial account that she signs on with her foreign husband, and she's also going to have to disclose the name of her husband. So that's one thing to keep in mind. Another nuance that a lot of people forget about is that there's not really an age requirement in terms of when the FBAR filing requirement is triggered. So, for example, if you have a child and you've set up a savings account, or somebody set up a savings account, or any other type of foreign financial account for this child, and those accounts have a value of $10,000 or more, that child's going to have an FBAR filing requirement, and it's going to be their parent or guardian's responsibility to file an FBAR on behalf of that child. Another thing to remember is if the parent signs on the child's foreign financial account, the balance in that child's foreign financial account has to be added to the parent's other foreign financial accounts in calculating that $10,000 filing threshold. Failing to file an FBAR carries with it some fairly stiff penalties. So the penalties can range anywhere from $10,000 to 50% of the value of the unreported accounts. Now, the penalties are per account per year. So assuming the $10,000 penalty, if you failed to report two foreign financial accounts for 2 years, that would be a $40,000 penalty. And if you look at the high end of the penalty spectrum with 50% of the value of the foreign accounts being the penalty, you could essentially wind up with penalties in excess of the value of the accounts. If you figure you have an account with $100,000 in it and the balance goes unchanged for 3 years and it's not reported, the penalty could be $150,000 on a $100,000 account. And it has happened where there's been some cases where the penalty has been in excess of the value of the account. Also, there are potential criminal charges if you knew you were supposed to file an FBAR to report certain foreign financial accounts and failed to do so. Now, something that I want to touch on, which is part of your tax return, but very closely related to the FBAR, is Schedule B to your Form 1040 tax return. Now, on the bottom of Schedule B, there's two questions, 7A and 7B. And the criteria for whether or not you mark yes or no to question 7A is the exact same criteria as for filing an FBAR, but without the $10,000 threshold. So there's a question on question 7A essentially asks whether or not you have signature authority on or a financial interest in a foreign financial account. If the answer is yes, then you have to check yes to 7A. And you'll see at the bottom of the slide, I have it in really big, bold letters, no threshold. And the reason is the question on 7A to Schedule B does not have a threshold. It simply asks, do you have signature authority on or a financial interest in a foreign financial account? If the answer is yes, then you have to check yes to question 7A. So you could have €5 in a French bank account and no other foreign financial accounts. You have to file Schedule B and you have to check yes to question 7A. Question 7B is simply a listing of the country or countries in which those foreign financial accounts exist. Now, on Schedule B, there's nowhere for you to list the balances of these foreign financial accounts or anything like that. It's just simply yes or no. Do you have signature authority on or a financial interest in a foreign financial account? And so I think that's pretty straightforward. And just to recap, the spectrum of what is considered a foreign financial account is really pretty broad. It's bank accounts, brokerage accounts, foreign life insurance with a cash value, foreign pensions, security deposits, mutual funds, and the list can go on and on and on and on. And certain gold storage facilities can be considered foreign financial accounts. So it's really a pretty broad definition. And every time the IRS gets asked what is a foreign financial account, the definition seems to get broader and broader. So now we're going to move on. We're going to talk about Form 8938. Now, Form 8938, like Schedule B, is filed as part of your tax return. So this is not filed separately like the FBAR. This is a form that is attached to your Form 1040 and filed along with it. Now, Form 8938 is required by the Foreign Account Tax Compliance Act, which became law on March 18th, 2010. Form 8938 is used to report foreign financial assets. Now, foreign financial assets include foreign financial accounts. So we were talking about the FBAR. We went through the definition of foreign financial accounts and what those are. So the Form 8938 encompasses the same things as the FBAR, being those foreign financial accounts, but in addition, it also includes foreign stock or securities, ownership in any type of foreign entity, or a financial instrument or contract with a foreign issuer or counterpart. So that last one, a financial instrument or contract with a foreign issuer or counterpart, is essentially a foreign annuity or insurance policy. Form 8938 has been required for individuals since tax year 2011. Starting for tax year 2016, it is also going to be required for U.S. domestic entities. We're going to do a separate webinar on Form 8938 filing requirements for entities. So you have to file Form 8938 to report foreign financial accounts, foreign stock or securities, ownership interests in a foreign entity, or a financial instrument or contract with a foreign issuer or counterpart if the threshold is met. And so on the next slide, we're going to take a look at what those thresholds are, because those thresholds are quite a bit different from that of the FBAR, And they also vary depending on whether or not you are married filing joint or single, or married filing single, or if you're a U.S. resident or a foreign resident. So if you're a U.S. resident, basically somebody that's living in the United States, if you're single or married filing separate, you'll be required to file Form 8938 if your foreign financial assets are $50,000 at year end or $75,000 or more at any time during the year. So basically you have to look at the end of the year and look and see, okay, were my foreign financial assets more than $50,000 or more? If the answer is yes, you have to file. If the answer is no, then you have to go back and look at the entire year and see if your foreign financial assets were $75,000 or more at any time during the year. If the answer is yes, you have to file Form 8938. If the answer is no, then you don't. Those thresholds increase for those persons that are married filing jointly to $100,000 at year end and $150,000 or more at any time during the year. Now, if you're a foreign resident, and we'll talk about what a foreign resident is in a minute. If you're a foreign resident, the thresholds are even higher because the IRS figured out that if you're a foreign resident, you're more likely to have foreign financial assets. So if you're single or married filing separately, you would be required to file if at year end your foreign financial assets are $200,000 or more, or if they were $300,000 or more at any time during the year. If you're one of those taxpayers who's married filing jointly, then those thresholds increase to $400,000 at year end or $600,000 or more at any time during the year. So whether or not somebody is a foreign resident is going to depend on whether or not that person is a bona fide resident of a foreign country or meets the physical presence test. If they meet one of those two tests, then they would be considered a foreign resident. These two tests are the two tests that are related to the foreign earned income exclusion, which is a separate topic, but I'll just cover them very briefly. So in order to be a bona fide resident of a foreign country, you have to have been a bona fide resident of a foreign country for a period that includes an entire tax year. So basically, January 1st to December 31st. So let's say you moved abroad January 15th of 2015, and in 2016, you're still a foreign resident. You would not meet the bona fide residence test for 2015 because it did not encompass an entire tax year. If we change the example a little bit and assume you moved to a foreign country on December 15th of 2014, and you were a resident of that country for all of 2015, and you're still living there in 2016, you likely would qualify for the bona fide residence test because you were a resident of that foreign country for an entire tax year, and that tax year being 2015. So you would qualify for the higher limits or the higher thresholds for having to file Form 8938. Now, the physical presence test is a little bit different. The physical presence test says that you have to be present in a foreign country for 330 days in a 12-month period. So essentially, you know, if we use the same example, you move abroad on January 15th of 2015, and now in May of 2016, you are still living abroad, then we would have to look at how many days that you were present in a foreign country. And if you were present in a foreign country for 330 days or more, then you would qualify for the physical presence test and those higher reporting thresholds. If not, then the lower thresholds would apply to you. There's also a series of special rules for allocating asset ownership between spouses, and this depends on whether both spouses are U.S. citizens, whether one of them's a non-resident alien and one of them is a U.S. person. They can get quite complex, but the point is to be aware that there are special rules for allocating ownership. Just a couple of other points. There are special rules for how to convert the currency or value the assets that have to be followed. Generally, an official appraisal is not required. So if it's an asset that, for whatever reason, it's not a marketable security, or it's not cash and an exchange rate can be applied to it, then your best guess of what it is worth will suffice. Some of the penalties for failure to file Form 8938. So it's a $10,000 penalty for failure to file. That penalty can go up to $50,000 if the failure continues after the IRS has notified you that you failed to file Form 8938. To me, probably one of the scariest penalties is the unlimited statute of limitations. So when the IRS passed FATCA back in 2010, they also put in there that there is an unlimited statute of limitations if you fail to file certain international information returns. And Form 8938 happens to be one of those forms. And basically what this means is, traditionally, the IRS has always had 3 years to audit a tax return. So if you made it past 3 years, even if you made a mistake, the IRS couldn't go back and audit it unless there were some very exceptional circumstances. Now that's changed. If you didn't file any of these the international information returns, the IRS can essentially go back and audit the entire tax return whenever they want. So if you failed to file in Form 8938 in 2011, even though that's more than 3 years old, the IRS could still go back and audit the entire tax return simply because you failed to file one of these required international information returns. Another monetary component to this penalty is there's a 40% penalty based on the underpayment of tax attributable to any unreported foreign financial assets, and of course criminal charges if you intentionally didn't file Form 8938. The foreign banks are reporting American account holders to the IRS, so on an annual basis, the banks are sending the IRS lists of U.S. account holders along with information regarding their accounts. They're also doing this for certain U.S. owners of foreign entities. So if you haven't been filing Form 8938, or you've been filing it incorrectly, or for whatever reason you left something off Form 8938, I would get that corrected as soon as possible, because it's not a question of if the IRS will catch it, it's a question of when, because this information is going directly from the banks to the IRS. That brings us to the conclusion of our presentation on FBARs and Form 8938. I certainly hope that you've found it informational and helpful. I am going to take a look to see if there are any questions here. It does not appear that there are any questions. So I will wish you all a good day or evening, depending on what part of the world you are in. And I hope that you will join us for a future webinar. Goodbye.